So let's talk about those changes.
Sure.
Quickly, one by one.
Okay.
30-year amortization. It is a big debate,
Yeah.
issue amongst me and you.
Exactly. Yes.
Because
Exactly.
we are not
Exactly.
agreeing right now that
Mhm.
why there is so much confusion on 30-year amortization. Who is it for?
Right now, as the rule states right now, a 30-year amortization is for all buyers that are purchasing new build homes with less than 20% as a down payment, and you can qualify with your income. You are able to buy a new build home and be able to utilize that 30-year amortization. That's for all buyers, not just first time home buyers, all buyers. Now, the one stipulation with it is if you are buying it as an investment property or a rental, you have to still have 20% down. But even with 20% down, you can have a 30-year amortization.
Oh yeah,
Yeah.
that is like okay. So for 30-year amortization is not applicable to resale.
No.
As of October 15th, 2024, it's not applicable.
So it's not applicable, but it is applicable for people that are looking to buy new build. So it's not on, yeah, it's not on resale. And it's not in effect until December the 15th.
Okay, that
Yeah.
gives some clarity.
Yeah.
The next thing is the increasing cap of for the insured mortgages.
Yes.
So before the cap was till 999.
Exactly. It was just right under $1 million. Now it's been increased to 1.5 million. So you can purchase a home with less than 20% down, as long as you qualify with your lender, bank, financial institution, up to a purchase price of 1.5 million. So that's a big jump, because when we're looking at that price point at 1.5 million, your down payment has to be now only 150,000, which is up around 10%, where before you had to have 20% down, which is 300,000. So now you've got an extra 150,000 that you can, work on either investing that or putting it into your home, purchasing some furniture, savings. I think it's a great way for people to get into that market where those price points for first time home buyers are around that 1 million to 1.5. Now income has to qualify for that. So we talked about that. As a couple, you have to have about 350,000 right now on today's rates. So you are looking at the couple that have probably a lot of seniority in their roles at work, or a position where they're getting some good income, but it allows the opportunity of first time homebuyers to get into the market. And I think that's a big win.
It is.
Yeah.
It is. I think it will help only a small segment of
Yeah.
the buyers, which are buying in the either Greater Toronto area
Exactly.
or Greater Vancouver area.
Exactly. Yeah.
Other cities, it may not matter.
And that's coming into effect December 15th as well.
Wonderful. So the next one is the renewals. A lot of people's
Yes.
renewals are coming
Yeah.
up. We are seeing the banks getting a lot of keys in their hand, and what is government doing to help them?
So this is a big change that I think will help a lot of people where their mortgages are coming up for renewal in the next 3 years, specifically more into next year, because that's where the bulk of mortgage renewals are coming up in Canada. They have eliminated the stress test if you are coming up for a renewal on your mortgage and you're just looking at options to transfer your mortgage or existing mortgage with your lender to another bank, financial institution, credit union because of rate. As long as you keep your balance and your amortization the same, that is called a transfer, and you don't need to stress test to be able to qualify for that moving of your mortgage. So that's a great initiative, and that came into place for November the 21st. So that will be coming up very quickly here, and it will help a lot of people.
So I think it's gonna still people will see an increase of 2 to 2.5% on their interest rates easily, right?
Yes. I mean, there will be an increase.
Yes.
To what extent by the time that they move their mortgage? I mean, we're sitting right now close to interest rates around 4%. If I look at where their mortgage was 5 years ago, we were sitting around 2.84%. So it's definitely been a 2% increase. But let's see where interest rates go over the next couple of weeks, right?
Yes.
We might see some big changes. I mean, today bond yields dropped because the inflation rate came down, right? So let's see where interest rates are, but still it will be an increase. Like it might be 1.5. People have to adjust to it, but there's lots of ways to be able to alleviate that. You could look at increasing your amortization and restructuring the mortgage. Now that's called a refinance. So you'll have to still be stress tested, but there's lots of opportunities for us to be able to leave payment shock at the time that your mortgage is coming up for renewal. I don't want people to think they're stuck, because there's not. People still have equity in homes in Canada, that is for sure. And we do have extended amortizations that we can look at for programs to help people with payment shock while we go through this time, right?
So the next thing, which is the most recent announcement by the finance minister, is all about the insured mortgage on the refinance when they are building a secondary or rental suite. Right?
Yeah. So it's a bit confusing, and there's still a lot of details that we as mortgage professionals are still working through with the lenders and insurer. But basically, this is another way to help first-time home buyers and buyers to be able to get into home ownership and have mortgage helpers, which is, an existing house that you're in or you're looking to buy. If you can put in a secondary suite for rental income, you're able to do that. And the cap now is up to 2 million. So you can qualify up to 2 million to be able to do that with less than 20% down and be able to utilize a 30-year amortization. That's coming into effect January 15th. Yeah,
Yep.
sorry to keep all my dates aligned here. January 15th. So we still have some time to work out details, but it's just another way that the government's looking at, okay, how do we help first-time home buyers and buyers get into the housing space and to be able to help them reconfigure their homes for additional income?